Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Tuesday, October the 29th, 2013. We're looking at the Dow Jones Industrial Average on short-term and the very long-term. Well, you'll understand in a minute. Looking at the Dow Jones Industrial Average, you can see a nice move today, the upside, 110, 111 points to the upside. And basically all we're doing is testing this previous high. We talked about that before. That's where we expect the price to go. That's what we're doing with all the signals here. Anytime you pull back below the 50 period moving average and you're in an uptrend, even if you come down here and take out the previous low, at that point in time you have a high point here, a low point here, a high point here, and a lower point here. So you have higher highs, lower lows. At that point you're just moving sideways, so you'd still be a buyer in this situation. All you do is look for this one to come up here and test the previous high. You have multiple signals. You had one here to set up, and a couple days later you get confirmation at that point. You had another one here that was a confirmation, previous hammer candlestick formation. We talked about that one at that time period, as well as this one this time period. And then again, now you've reached up here and you've hit that point. All I would do in this case is advance the stop loss limit. That's it. And there's a reason for that. You're in a scenario where, yes, your market's being driven up by the governments around the globe, just dumping money into it, and that's fine. It drives things higher, but only to a point, and eventually you have to pay the piper for that. So let's look at the long-term picture and show you what I'm looking at. Okay, this is a look at the Dow Jones Industrial Average 20-year chart. Each one of these candles represents a month worth of trading activity. Don't worry that you can't actually make out the candlestick formations. That's not the point. The thing I want to show you here is looking at the price activity comparative to the RSI. The RSI is the best indicator for overbought over the long term. It's going to be the last signal that you will get. Everything else will already have been overbought by the time the RSI signals that way, so that's why we use the RSI for that situation. In this case, I just want to show you the situation. You had this massive rally off of previous support and everything, big move here, that makes sense. Then you get to the topping signals, you start getting the high point, low point, lower low, like this, and you're trending down in the same time period. Price is trending up. Okay, this is heading into the 2000 .com crash, that kind of situation. Then you, of course, come breaking down. This right here was saying bearish divergence, not to be trusted here, and that's what you end up with a lower move here. Now take note of this low point here. She bounces off the 30 line right on the RSI, low point here, and you get this higher high here. Now we compare, when we look at this, we get this high point here on the ultimate oscillator, and the RSI, but look at it comparative to the previous one. It's still downtrending right here, right? And you can see this high point here, and the current high point here is trending up. Again, bearish divergence warning, not sustainable. But we tell you to look for it to break down. That's exactly what happened, 2008 crash. Now here, note this, low point here is lower than you'd seen here. Is this an overshoot to the downside? Not according to the RSI. Low point here is lower. So this is confirmed that that's the truth. That trend is true. This trend up here, we had the high point higher, that was said false and proved that way. In this case here, you can see there's a nice move come back up here, Fed stimulated, so forth and so on, and you get higher than you'd seen here. But look at the ultimate oscillator, the RSI. You can see lower high than you'd seen here, and much lower than you'd seen here. All you've done again is set up another bearish divergence. Is this the place right here where you want to be going all in? I don't think so. This is a situation where we're getting in that topping situation, and again, it's not something that you look at and say, well, immediately it's going to break down. It doesn't work that way. The ultimate oscillator, the bearish divergence formation can continue to press for a while. You saw this one go on for a little bit here as well. So you had multiple times that she came up here, each time lower than the previous, but this went on for a little while. So it's just a situation that I want to bring your attention to and let you know that you are in a situation where tops form, and that's something you should be keeping an eye on. That's why we're advancing stops everywhere. If you've not been to the free website at PerfectStockAlert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless, take care, and I'll see you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.